Hey everyone, hope you had a really good weekend. It's a long weekend here in Canada. Civic holiday tomorrow. The TSX will be closed, but the US markets are open. I'm not going to analyze many stocks today because I have a little bit of a headache and I have some other things that I want to do. But I'm going to analyze this stock because this was requested that I analyze this by Junior. And if you want me to analyze one of your stocks, you can go to my website, 10baggerstocks.com, and that's one of the services that I provide. So you can check that out. So I'm going to take a look at this stock. It's called Atossa Therapeutics, biopharma company. Okay, and just before I get into this company, biopharma stocks in particular are extra risky stocks. And the reason is that a lot of these companies, they don't have an approved product yet. They're still in trials. They still need to get FDA approvals and stuff like that. And since that's the case, and you don't really know when that's going to happen, sometimes it could take years before a company gets FDA approvals, if they get FDA approvals, and if they're able to even stay afloat until that happens. And a lot of these companies, they need to keep raising money and diluting the stock and diluting shareholders just in order to stay afloat and get by. That's not every biopharma company, but that's a lot of them. So a lot of these bigger guys like, Moderna and Pfizer, they have a ton of capital. They have products that are already generating revenue. They got new products that they're working on in the pipeline, but in the meantime, they're making money from somewhere else to keep them afloat. Now, this guy in particular, Atossa Therapeutics over here, and I'm going to pull up the balance sheet. Just give me one moment. Okay. So this is the last quarterly statement as of March 31st, 2021. Okay. Now it says they have total current assets of $141 million. Okay. Cash and cash equivalents of $137 million. Okay, so it looks like they must have raised money between December 31st, 2020 and March 31st, 2021. So they must have raised some money because they didn't make any money. They have negative cash flows. You look at their cash flows, operating, they have expenses, but they're not making money right now. They don't have revenue right now. Cash flows from operating activities, it's in the negatives. So this company's not making money right now. Now they have money on hand that should last them a while, because if they lost $3.5 million last quarter, net cash used in operating activities, $4.4 million. It looks like, they got a couple years worth of cash on hand, potentially, to stay afloat. Okay, but there's some risks here. And the risk is that, it's good that they have some money on hand. And I checked, and as of here, it doesn't look like they have a lot of debt. And they reduced their debt between last year, December 31st, 2020. They had $1.6 million in debt, and now it's saying they only have $722,000 in debt. Total current liabilities, $1.37 million, and last year was $15.671 million. So big difference. They must have raised some money and paid off some of their debts. So that's somewhat of a good note, is that they don't have too much debt as far as I could see from this quarterly statement. And they have a decent amount of cash on hand that should last them at least a couple years. Or at least a year, I'd say, because expenses can vary at these companies a lot. And while they lost $4.4 million last quarter, that's the amount of cash they used. It doesn't mean, that next quarter is going to be the same. Next quarter could be higher, could be lower, and it could vary. But the risk is ultimately that they're not making money right now. So they're just spending the money that they already have. And until their product gets approved, until they're doing breast cancer, some breast cancer product, COVID-19 product, until that gets approved, the company is going to be eating away at their cash, and they're going to continue to need to raise money from shareholders. And if they continue to dilute their stock, and to my knowledge, that's why it dropped this last day, is because of a potential dilution. They're looking to raise more money or something, apparently. If they continue diluting their stock, that's very bad for shareholders. And I'm going to show you. Let's take a look at the 12-month chart. This is the 12-month chart. Each candlestick represents 12 months, 1 year. The stock came out in 2012, and look how it's performed since then. Pretty much every single year, it has declined. And, you know, if you invested in the beginning, when it first came out, $1,000, you know, it was around $1,000 this year. It's down to $2.99. Okay, now the stock, I'm sure, didn't come out at $1,000. They probably did a lot of reverse splits, which is why it says it used to be $1,000. Now, just because a stock was 1,000 or apparently at one point doesn't mean it's going to go back there. It might, you know, if they come up with a revolutionary product, if they get their FDA approvals and they start raking in the money, of course, the stock can eventually go back up. But when you have a performance like this on a stock and the company is still not making money and they're burning through shareholders, they're burning through equity, they're burning through money, and they continue to dilute their stock, you know, it's a riskier investment. I wouldn't say don't invest, but it's definitely a riskier investment. When you look at this, if you invested $1,000, you're down to $2.99. It went as high as $2,231 according to this. Obviously, it's been reverse split and whatnot, so it was never that high. Maybe it was only 20 or whatever it was at the time. And that shows you how many times they had to do reverse splits and stuff. Otherwise, the stock would be less than a penny. Otherwise, the stock would be like 0.001 or something. So they had to do reverse splits just so it keeps a reasonable value, and in order to maintain their status on the NASDAQ, because the NASDAQ requires a stock to be over a certain price to stay listed on the NASDAQ. So the long-term performance of this stock is obviously not good. Let's take a look at this monthly chart. Well, I'm getting a freeze here. Froze on me. Come back. Monthly chart, just quite brutal. A lot of volume down here. So, and I'm going to assume this is in big part because of COVID, because they started doing something in regards to COVID. So, you know, I'm sure a lot of interest came out of that. And look at this volume coming up. And it had this big increase already, big volume spike here, but it did a big pullback, found some support, and started an uptrend. And you can see it was having higher lows almost every week, except this one. Till this week, big volume spike at the high, and big reversal candlestick after on the weekly. Now, we look on the daily, and you have a very clear bearish head and shoulders on the daily. This is the left shoulder, the head, the right shoulder. Not very nice pattern. And it broke this critical support over here, and it followed through in a big way. And it consolidated for a couple weeks around this area and this up and down pattern, and then it broke bearish on Friday on, I think, news of further dilution to my understanding. Now, it just tapped that 200-day moving average. That's the purple line. That's the 200-day moving average. It tapped that, did a little bit of a bounce off of there, and bulls are going to try to hold that level as a support. I'm sure some bears are looking to cover because they might have made some money on this down move, and it's a little overextended to the downside, and we're just starting to get oversold. But just because something's oversold doesn't mean that it's not going to get more oversold. As you can see, it went further into oversold territory at times in the past. Over here, it bounced off right around that 30 mark, around where it is now. Doesn't mean that's going to happen again. This is a pretty brutal pattern over here. Now, since we are a little bit overextended to the downside, we're probably going to be a little bit far away from that red line. We might get a little bit of a bounce over here. But the overall trend is still down. Personally, at this point, I would not want to own or be investing into this stock, seeing this 12-month chart. Okay, seeing this monthly chart, the weekly chart, okay, the daily chart, not nice either. So on most time frames, it's not a very pretty chart. And the company came out in 2009. That's when it was founded. It was listed on the stock market in 2012, and that's what it says right here. Okay, listed on the NASDAQ in 2012 under the symbol ATOS. So still the company, and look how this stock performed over the years. Oh, look, we're looking at something else over here. Sorry. The stock has not performed well over the years. Okay, and I got burned on a biopharma stock. Okay, I got really burned, and it had kind of a similar chart. And I thought maybe they're going to get the approvals. Maybe, you know, they're finally going to pull through. You know, who cares about the past? Maybe it's finally their time. They've been working on this for so long. It's finally going to get approved. It's finally going to go mainstream. They're finally going to start making money. And, you know, even when it was approved and whatnot, it still didn't do much because it's just a bad history of, and I guess it wasn't a revolutionary product. It wasn't as good as I thought it would be and as the market thought. So the market just didn't even care, and the stock got destroyed, and so did my investment. And that's something I learned again. Be careful with biopharma stocks. They can go very well, and you can make all kinds of money if they get their approvals, if they get that FDA approval, if the trials go well and stuff like that. But a lot of times these stocks run very hard, very fast on a little bit of hype or a little bit of hope, and they often reverse very violently and very quickly. So there's a lot of risks here. As of now, I don't see many bullish signs, but there is a lot of support around this area that the bulls will try and hold. Just in general, okay, just in general, this area in general, because it's traded here for a while before, is going to be a support area. You have that 200-day moving average. You have that lower daily Bollinger Band. It's getting oversold on the RSI. You have a volume spike this other day. Now let's see where the volume is on that hourly. A lot of it's near those lower levels. So I wouldn't be surprised to see a little bit of a bounce in the short term, but the overall trend is still down, and it would be hard to make a recommendation to buy this right now other than maybe for a quick flip. What you want to see, if you are really a believer in the company and you want to invest in the company, you want to see an uptrend develop. And over here, you can see this uptrend was developing. You have a low, high, bull flag, higher low, higher high, higher low, higher high. It was on a clear uptrend. Okay. Now, it was this big volume spike at this high and this big upper wick of profit taking, and the fact that it was so overbought and a divergence on the RSI that signaled things were turning. And then you had this bearish MACD cross, and there was a lot of signals to get out from up here. And there's no signal that says buy yet other than maybe for a quick short-term bounce. What you want to see is an uptrend develop, but that might take some time because a lot of people got burned now. A lot of people are sitting in the red. It's still on a downtrend. It had this big bearish head and shoulders. It gapped down to the downside, didn't fill that gap, showing weakness. Now, we may be looking for a higher low. Maybe looking for a low on the weekly to get a bounce to set a lower high. So that is possible, and since it ran so hard, it was 980. It could see a bounce to $5-6 or something like that before heading lower, possibly to retest this area. It would be hard to imagine it would go much further than that if it were to start squeezing and do a move to the upside. It would be hard to imagine that it would move higher than that $6 mark. But as of now, it looks like a risky stock. And, you know, these stocks are kind of like lotto tickets. And, you know, even looking at the charts, sometimes the charts can look bad. See, the chart looks, I'm just be honest, it looks terrible to me. It's not something that I would want to invest in. On every time frame, there's just red flags. And then I look at the company's quarterly statement, and they're not making money. They're draining through their cash. And there was something else I noticed, actually, if I still have it. Let me see. One moment. Okay, so this is something else I noticed. I hope I find it on here again. Look at this. Okay, this was 1 year ago. 2020, 1 year ago. Weighted average shares outstanding, basic and diluted. They had 9.1 million shares. Okay. Today, 1 year later, they have 92,500,000 and 587,000 shares. So if you owned 10% of the company before, they diluted your stake 90% pretty much. Now you only own 1% of the company. So they did heavy dilution in the last year. So, like I said, there's a lot of red flags when it comes to this company. There's red flags on the chart. There's red flags on the balance statement. And, you know, from here, it's really kind of a gamble. You know, are they going to get approved? Are they not going to get approved? If they get approved, maybe you'll get a spike in the short term. But even then, is that spike going to repair all this damage that was done? Is their product that they're working on going to generate millions and millions or hundreds of millions or billions of dollars in revenue to justify this stock going higher? Because the company's worth, I think I checked, is around 360 million right now, US. For them to be worth that much, they should probably be pulling in, you know, maybe at least 50 million or so in revenue per year and some profits. Right now, they got $0 in revenue, you know, and so the stock is trading at what it's trading at because people are hoping that this thing gets approved and they start making money and it skyrockets and all that kind of stuff. So I would just say it's a little bit like a lotto ticket. It can go either way, and it's a gamble on whether they get approved or not, and whether even if they do get approved, if they're going to make a lot of money in their business. So I'm not trying to dog the stock or anything, but I would say I've gotten really burned on a biopharma stock before. I've gotten hit hard, and so have many other people. And these stocks are risky. And they tend to burn, a lot of them, you know, and sometimes it's a good idea when investing in biopharma to just stick to the bigger players like Pfizer and Moderna and stuff like that, because those guys, they already have products that are making money. They got more products in the pipeline and they have a ton of money to fund those products. And it doesn't matter how long they take to get approved, because they're still making money on all their other products that they already have approved. So biopharma stocks are risky. That's what I'm saying over here. And the overall trend on this stock is down. But I wouldn't be surprised to see a little bit of a short-term bounce, but I'm not too confident in that. The overall trend right now is down. Sorry if this isn't what you wanted to hear, but I'm just saying my feeling, my analysis, and I could be completely wrong. Maybe they'll announce something. Who knows where this company will be in the future. I personally would just rather wait for positive developments than to jump in on something that's on a downtrend, hoping for that big news. A lot of people do that. You buy something, you're hoping the big news comes out, and it never comes out, or it takes so long, and by the time the news comes out, the stock's already way down. So sometimes it's good just to wait for positive developments before entering a stock like this. Thanks for watching. Thanks for recommending me to check out this stock. I hope I've been very informative. I hope I've helped. And that's all. Remember to like this video, comment, subscribe, share, check out my website. And like I said early in the video, if you want me to do an analysis on one of your stocks, check out my website, 10baggerstocks.com, and that's one of the services that I offer. Thank you guys. Have a nice night.